Okay, thanks everyone for joining us today and welcome to this educational presentation. Today, this is going to be a great class because I'm actually going to give you the rules to 3 exit strategies that I truly believe can change the way you trade. And the beautiful thing about this is that you can start using these strategies as early as tomorrow because you'll get all the full rules. You know exactly how to apply them. Let me share with you a brief chart here and get used to this chart because we're going to be using this in all of the examples because just to convey how easy it is to transfer these strategies onto the same chart. Let's say you're trading this stock, FANG, F-A-N-G, okay? And at the beginning, you're saying to yourself, well, I'm not really sure what this is doing, going up, going down, then going back up again. But let's say your strategy or whatever you trade, whatever it's based on, makes no difference, generates a buy signal right here, okay? So you're long, and in a matter of days, you're feeling really good about your trade. You have a really nice profit. Here's the only problem, and this is the problem that happens with most traders and a lot of our new students that come to see us. They say, well, Steve, now that I'm in a really good trade, I have no idea where to get out. You know, I put all this work and attention into entering into the trade and, you know, doing the research on the stock or the market or the future or the currency pair. But now that I'm in the trade, I don't have any idea. I'm hearing all these outside sources. Some guy on TV is saying it's going to go to the moon. Some guy is saying, no, you got to get out. The guy in the chat room is saying you should be shorting. So I don't know what to do. Well, this is what usually happens when you're in this kind of indecision. You wait too long, and then what started out as a very nice profit turns into a very large loss. And now you thought that you had a nice little trade here. It's now turned into a long-term investment because you're hoping and praying for it to come back. Well, with just one of the strategies that I will be teaching you today, you would have actually been exiting right here at or near the very top for a 25-point gain. And once again, you'll learn all the rules, nothing hidden. You'll know exactly how to apply this to whatever market you're trading, whatever time frame. So this is the subject of today's educational class, 3 exit strategies that I truly believe will change the way you trade. So welcome once again. My name is Stephen Primo. I am the president and founder of Specialist Trading. For those of you who are new to my presentations, I've been trading now for 48 years. In fact, in a couple of months from now, it'll be 49 years. I can hardly believe it myself. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of those years I was a specialist. That's where we get the name Specialist Trading. Now, specialist isn't any more special than anyone else, but if you ever Google those pictures of the old trading floors back in the old days with a lot of paper on the floor and these guys behind these large wooden podiums making these weird hand signals, those were actually specialists. They specialized in making markets in roughly about 50 or 60 stocks. So once again, in the old days, in the antiquated days, if you wanted to buy or sell, let's say a stock, IBM, which is one of the stocks I made a market in, you would call your stockbroker. Okay, the stockbroker would say, okay, what do you want to do? And you'd say, I want to buy 100 shares of IBM. He would put you on hold, call the floor broker, and say, I have 100 shares of IBM to buy. He would walk up, take that order to the trader who specialized in making a market in IBM and say, I want to buy 100 shares of IBM. And this is what I did. Roughly for 9 years, I traded through the crash of 1987 and the bull market that followed. I left the floor in the mid-90s to manage money, to also trade my own account. And 15 years ago, I teamed up with my sister site, Pro Trader Strategies, with one goal in mind, and that was simply to educate traders. That's the only purpose we serve. We don't spit out on a nightly basis buy and sell signals. We don't tell you what the market is going to do or don't predict, because we are first and foremost an educational company. You see, if there's one thing I've learned in my nearly 5 decades of trading, that is what's missing from most traders. It's not the best strategy or enough capital or enough experience. It's really education, because the reason you need this education is so that you can make your own trading decisions. You see, most people don't have the education, so they say, well, I'll let some guy in a chat room tell me what to do, or I'll let some guy on TV tell me what he thinks the market's doing, or I'll let my broker tell me what to buy or sell. And when you do that, you're taking yourself out of the game. The entire industry is based on that, on you letting someone trade for you. Now, think of this. If that works so well, why has it been estimated that 80 to 85% of all traders fail? Well, it's obvious that that doesn't work. That concept doesn't work. The only thing that I have seen work in my nearly 5 decades is when you make your own trading decisions. So this is the goal and purpose of specialist trading, to provide all of our students around the world. I'm happy to say we have students in over 115 countries and in every state in the United States with all the tips, techniques, and strategies and methods that I've accumulated that have high levels of consistency. And then we work with you and mentor you and trade right there with you so that you'll be able to make your own trading decisions. That is the purpose, the only purpose of specialist trading, to put the power back in your hands. And you'll see that in today's educational class. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results today by applying these 3 exit strategies, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost, once again, an educational company only, all examples are strictly for educational purposes only. Now, if you'd like to get some more education on a daily basis, please feel free to follow us on X or Twitter, whatever you'd like to call it. There's our handle right there, at SPCLSTTRADG. You may want to copy that down, because every day I post about 5 or 7 different snapshots of signals that our methods have generated. Also, little bits of financial wisdom, ways in which to increase your odds for consistency. So there's lots of great free education on a daily basis. Please feel free to follow us on X. Now remember, as I said, our only goal is to educate you. We're not here to trade for you, because a good mentor does not trade for you. A good mentor actually teaches you how to trade. Now, this is the way I was taught some 48 years ago on the floor of the stock exchange. When I was struggling myself, I was lucky enough to have some mentors that taught me the same edge we call the specialist edge. And I believe that edge has sustained my trading now, going on 5 decades. So hopefully I'll be able to do the same for you. All right, with that stated, let's begin today's educational class. And today's theme is something I learned a long time ago on the floor, and it's having an exit strategy can avoid unnecessary pain. Think of it. A lot of traders feel comfortable with their strategy or feel comfortable with the market they're trading. They just have a difficulty with getting out of the trade. Oftentimes, we have new traders come up to us. They want to be students. They say, listen, Steve, I have a strategy. It works okay. I just either get out too early and I watch the thing just soar and leave plenty of profits on the table, or maybe I get out too late, just like that first example I shared with you. I had a nice winner. Now it's turned into a loss because I held on too long. So if you have an exit strategy that you feel comfortable with, it will avoid this unnecessary pain. We've all been there before, where we've gotten out too early and we've seen the market just soar, just go in our direction. Or we've stayed in too long and now we have a long-term loss. We want to be able to trade something that makes us feel comfortable and meets our needs. So what I want to teach you today is really what most people don't know, and that there are only 2 types of exits. Now, there may fall a lot of different strategy techniques and exit methods within those 2 types, but there are really just 2 categories, just 2 types of exits. All right, so let's define what they are. The first is a fixed exit. So what exactly is a fixed exit? Well, it's just the way the name implies, meaning it's fixed. In other words, you know where that strategy exit is, oftentimes prior to even entering the trade, because it's at a fixed level. Let's say you bought a stock XYZ at 50 and you said, well, the strategy says, or my method says, to get out at 60. So you put a limit order in there and you just keep it there at 60. This is a perfect example of a fixed exit. So some of the characteristics of the fixed exit is that oftentimes you'll know where that exit is prior to even entering the trade. And when you use a fixed exit, you usually apply it with a limit order because it's going to stay there, all right? So that's the first type. The other type is the exact opposite. It's called a dynamic exit, meaning it's fluid. You don't often even know where you're exiting prior to entering the trade or even when you're in the trade. That's how different this is from a fixed exit. Why? Because you're going off what the market is telling you. Rather than saying the way a fixed exit does, where you say, I know it will get here and I will exit here, a dynamic exit says, Well, listen, I don't really know where it's going. I will let the market tell me when to get out. So therefore, you have no idea where this exit is in advance. And so you're just trusting the market to tell you when to get out. Now, some of the advantages of this is how often have you seen a trade just take off? Maybe you've exited with a nice profit and it just keeps going and going. A dynamic exit oftentimes will allow you to stay in the trade a long time. And so you can capture these large profits. That's one of the real big advantages of trading a dynamic exit. One of the disadvantages is that fear factor where you don't know where you're going to get out and you're kind of just, throwing all caution to the wind and letting the market take advantage. So you have to have a lot of faith. Now, is one of these types, one of these categories better than the other? Absolutely not. The only thing that's wrong is when you are trading out of sync with your nature. In other words, let's say you're the type of person that likes a fixed exit. You're very structured. You like that discipline of knowing where everything is before you get in or out. But your strategy has a dynamic exit. Well, that's where you're trading out of sync with your persona. You have to be able to apply a fix or vice versa. Let's say you're a more easier going trader. You don't mind going and hanging in there for the long haul. Well, if you trade a fixed exit, you're going to be trading out of sync with who you are. You won't feel comfortable. So this is one of the most important things we teach our students. You have to do a little soul searching, first of all, and find out what type of a trader you are. What makes you feel comfortable? Are you the type of trader that likes to get in and out quickly? Or are you the type of trader that likes to stay in as long as possible? Do you have very small, minimal risk parameters, or do you not care about risk? You have a large account size? Everyone trades differently. Therefore, no two traders should ever trade alike. That's why we give you all these different variables, because we want you to decide. As I said earlier in the presentation, you are in charge of your trading. You have to make your own decisions. Our job as a mentor is to provide you with all these different categories so that you can choose which makes you feel the most comfortable. So these are the two types of exits. The only thing is that you have to decide which one makes you feel the best. So with that stated, let's go into the rules of exit strategy number 1. And we call this previous high, previous low. So who exactly is this exit strategy for? Well, it's for traders who want a fixed exit. So as I said, if you've done a little soul searching and you found out what type of trader you are, and you say, you know what, I like fixed exits, well, this is a perfect exit strategy for you. All right, so let's look at our chart here in FANG. As we see, the stock is going up just based off this, older example here. But let's say you're a student of candlesticks. And what do you see here? You see, well, this may be a sell signal. We have a bearish engulfing pattern. This is one of the most negative patterns in candlestick patterns. And let's say you like to trade this and you decide this is a good sell signal and you want to go short. Now, when we say sell, we're not talking about exiting and getting out. We're talking about entering a trade to go short. Maybe you want to buy some puts. All right. So what we want to do is first find out where the previous low is, which would be right here, okay? According to this chart, this is the most recent previous low. And why are we concerned with this? Because oftentimes we have found that once you enter into a trade, price will gravitate towards that previous low. In this case, the previous low because we're short. The previous low acts like a magnet. It pulls price down towards it. Now, oftentimes it will get just to it and then turn around. Oftentimes it will just keep going. But regardless, it acts like a magnet pulling price in that direction. So let's say you did go short and you decided to sell there and you placed a limit right at the previous low. Well, look what happened. You had a nice profit in about 5 days. And right after that, the price started to head back up. So you see how that works? There's nothing you have to worry about in terms of percentages, exits, or a risk reward. We're not concerned with that right now. We're only looking at fixed exits. And you see how price acted like that. Now, let's say we're looking at the same stock, but now our strategy generates a buy signal. Okay, if you still want to use this exit strategy, if you're still a fixed exit trader, well, then you would look for the most recent high, the previous high, which is right here. Once again, the concept behind this exit strategy is that the previous high will act as a magnet pulling price up to that level. Now, oftentimes you'll see it get just above, or I mean, below there and then turn around. Many times it will get right to the actual price and turn around, and oftentimes it will get a little above. So therefore, it's up to you to decide. Do you want to place it right at the exact high, the previous high, a little before, a little after? It's entirely up to you. But here is your entry point right here. You could place a limit right at the most previous high, and look what happened. Let's watch the trade unfold. 1, 2, 3 days, it gets there. So that is your exit, a fixed exit. And here's one of the things we wanted to tell you. Remember, when you use this method, price will act as if it's gravitating towards that previous high or previous low of your short. But it does not guarantee that it's going to stop there. It's just telling you that it is going there. As you can see, it went a little higher. And this is where our beginning students say, well, Steve, it got up there, but then it kept going higher. Remember, this is not guaranteed for it to stop there. It's just telling you that's most likely where it will gravitate towards. But as we look back in hindsight, the stock fell out of bed. And looking back, wouldn't you have liked to have gotten out here at least prior to the large sell-off? All right, so let's review exit strategy number 1. That's how simple it is, okay? This is a fixed exit. Now, if you're long, you want to exit at the most recent short-term high. Now, remember, it doesn't have to be exactly at that short-term high. It can be if you want to. It can be a little bit above, a little bit below. It's entirely up to you. Remember, the power is in your hands. You make the decision. That's why we always tell our students, paper trade with these methods for a while so you can have a better understanding and know exactly what you want to do. If you're short, same thing. This time, though, we're turning it upside down. We're going to exit at the most recent short-term low. Okay, that was exit strategy number 1. Let's move on. You have the full rules to that one. Now let's go to exit strategy number 2. And this is called the 5-period simple moving average exit. So who is this exit strategy for? Well, it's for traders who want the opposite, who want a dynamic exit. Remember, a dynamic exit is the exact opposite of a fixed exit, like strategy number 1. In this particular method, we don't know where we're getting out. We are letting the market tell us. So how are we going to apply that? Well, let's look at our old friend FANG again. Let's take that buy signal that we previously had. Once you enter into the trade, apply a 5-period moving average, 5-period simple moving average. Now, it doesn't matter if we're looking at a 10-minute chart, a weekly chart, crypto or currency pairs, makes absolutely no difference, okay? The same process, apply a 5-period simple moving average. And here's the way this works. You will stay in the trade as long as price closes, the closing price of the bar closes above the 5-period simple moving average. You will only exit when price closes below the 5-period simple moving average. That's it. So let's say we bought on the close of this particular day, our setup bar. Okay, so we're in the trade. Let's watch how it unfolds. All right, the next day doesn't really do anything, but it still closes above the 5-period simple moving average. The next day, now it's starting to go in our direction. And now it's looking really good, but we still don't have any idea where to get out. If we were trading a fixed exit, well, we would have already been out. But with a dynamic, well, we're making more money, but it's still only on paper. All of these closes have been above the 5-period simple moving average. And now we have another day where we opened higher and closed lower, but we're still above the 5-period, so there's no change there. Now we're getting closer, okay? So maybe we're getting ready to exit. Now here's where students, especially beginning students, have trouble because they say, well, Steve, I exited because look, it traded, it opened just below the 5-period and went below, so I exited. Remember, the rules state that you exit when price closes below the 5-period move. Now this didn't close. Sure, it traded below, it intersected, but it closed above. So we're still in the trade. Still in the trade. Still in the trade. It's intersecting the 5-period simple moving average, but we're still in it. And now look, now it's really going up. So are we glad we didn't sell this yet? We've got more profit, but still it's only on paper. We're still above. Price is rising, but that we had a down day. Now we have a downward day, but it looks like it closed just above or maybe on the 5-period moving average. So we're still in the trade because for all we know, the next day it could open or gap up higher and keep going. So we're in the trade, but guess what? Now we closed finally below the 5-period simple moving average. So this is our trigger to exit. We have a full close right below the 5-period moving average. Now you can exit, on the close or on the opening of the next day, but let me share with you two different variables on how to apply this. Let's take exit plan number A. If you're more aggressive and you just want to get out, you say, thank you, I'm going to take my profit. Well, 5 minutes before the close, it's going to close, unless something drastic happens, maybe a minute before the close, we're going to be below the 5-period moving average. So just exit, sell at the market and take your profits. Say thank you very much. That's a more aggressive way. We call that exit plan number A. But we can also use exit technique B. And that's for more conservative traders. And that's the way this works. Now, when you close below the 5-period moving average, what you want to do is draw a little line below there. And you'll say, I will exit if we trade below on the next bar on the next day. So in other words, this particular exit is a little bit more conservative because oftentimes we've seen that price will go right back up and then you're right back closing above the 5-period moving average. And this was just an aberration for one day. So you want to be a little bit more conservative. You're willing to take the risk. So you wait and say, well, listen, if tomorrow, the next day, we trade below, it doesn't have to close, just has to trade below there, that's where we'll get out. So maybe you put a stop sell right here, 1 or 2 ticks below the low. Okay, so let's see what happened. Remember, if we traded the more aggressive exit A, we were out. We're already out. But let's see what happened the very next day. The very next day, we had a gap down. So we would have exited on the opening using exit B, and that's where we're out. Now, either way, we're out of the trade. If we used exit A or exit B, we are out of the trade. And either way, you have a profit. And either way, you still missed a big down move and where you would have given back all your gains. So do you see how this is a different concept? We don't know where we're getting out until the market tells us based on where price is in relation to the 5-period simple moving average. This is why it's called a dynamic exit, because it's dynamic, it's fluid, it's moving with the actual market as told to us by the 5-period simple moving average. So remember, you have two different ways. You can either use the more aggressive exit A and get out at the market, or the more conservative exit B, meaning that if it trades below there on the next day, which it did, that's where you get out. Okay, so let's review. This is a dynamic exit, meaning it's letting the market tell us where to get out. Now, if you're long, you're going to use exit A, and you'll exit at the market on the first price bar that closes below the 5-period simple moving average. Conversely, if you are short, well, using exit A, you will exit at the market on the first price bar that closes above the 5-period simple moving average. These are the rules for exit A. If we're using exit B, we will exit when price trades below the first price bar to close below the 5-period simple moving average. And if we are short, we will exit when price trades above the first price bar to close above the 5-period simple moving average. I know this seems a little wordy, may seem a little confusing, but just practice, watch this video over and over, and I'm sure you'll get a better understanding. But these are the complete rules, and these are the two options that you can apply if you want to use exit strategy number 2. Okay, let's move on now to our third and final exit strategy. This is exit strategy number 3, and we call these range extensions. Now, just let me tell you that these are probably our most popular way of exiting for all of our students at Specialist Trading, because our platform automatically displays these for you. It's done automatically, but I will give you the rules on how to apply them and how to put them together and configure them. But the beauty of our platform, what we have is that with one click, you can see exactly where they are. And they're extremely powerful. I personally like to use these myself from time to time. They're easy to use, but they give you different options. So let's talk exactly about who this exit strategy is for. Well, it's for traders who want multiple fixed exits. giving them the ability to increase their risk-reward ratios. So before, when we used the first exit strategy, which was the previous high, previous low, you only had one fixed exit. That was the previous high, the previous low. There was really no other option. Here, we have multiple exit points where we can use fixed exit points. So this way, it will help us to determine, we have the option as to what type of risk-reward ratio we have. Maybe 1-to-1, 2-to-1, 3-to-1, 4-to-1. I'll show exactly how to use it. And this is the reason why it's so popular among our students. Oops, went backwards there. Let's go forward. And once again, let's look at our old friend FANG here, okay? All right, let's say we have this buy signal once again. We're not going to use the previous high. We're not going to apply the 5-period simple moving average. We're going to use range extension. So how exactly and what exactly does that mean? Well, we want to apply the range of the setup bar. Now, if you're not familiar with what a setup bar is, any strategy, any method, any technique, when all the rules come into play, when all the requirements have been met, okay, when A and B and C have all been met and you have a signal, that bar is called the setup or the signal bar, okay? As you see here, we have a green arrow. The bar above that is the setup bar or the signal bar. They're the same thing, but that's the bar where everything comes into play. Now, it makes no difference what it's based off of. It could be based off fundamental news. It could be based off some indicator, or it could be based off the full moon. It makes no difference. But when all the requirements are met, that bar is called the signal bar. And it's extremely important because this bar comes into play on how we determine what the range extensions are. All right, so once we determine what our setup bar or signal bar is, as we have right here, we want to measure that from top to bottom. And when I say top to bottom, it doesn't mean from open to close. It means from extreme high to extreme low. From the top of the wick, if you're looking at candlesticks, to the bottom of the wick. So an example, if we were looking at this bar, let's say this bar was our setup bar. It would not be from the open to the close. That's not the range. The range is from the top of the wick to the bottom of the wick. This is your real range, okay? I don't know, for some reason, when I first started 48, 49 years ago, the range was always viewed upon as that. And for some reason, some years later, it was determined that no, the range is from open to close. The range is really from the extreme high to the extreme low. So just determine how many points that is. Let's say, just for all intents and purposes, just to make things simple, let's say that's 10 points, okay? All right, so it's 10 points. Since we're going long, you want to add from the very high another 10 points, and that will give you this 100% to 200%. Remember, the range from extreme high to extreme low is 100%. We simply add that amount of points, and that gives us the 200% level. Now, what is this for? Well, a lot of our students are type of traders that, once again, they've done some soul searching because you're in charge of your trading. You have to know what type of a trader you are. They like to get in and out quickly. They don't mind if they have a not favorable risk-reward ratio. They say, listen, I'm making exactly what I'm risking, but my strategy has a number of winners. It has more winners than losers. And so over time, I will be profitable. So they don't mind getting out early. And this is what we suggest. Use the 200% exit level. Now, we also have traders that say, you know what? I'm more of a swing trader. I like to go more for intermediate type of trading. I don't want to get out that much. Also, I'd rather make twice or even 3 times what I'm risking. I don't want to make the same amount. I need to make a little bit more, all right? So if your stop level is somewhere around here and you exited here, well, you're making basically the same amount you risked. But if you add that same amount of points, let's say 10 points right here, and add it from the 200% level, this will give you the 300% level, okay? Now, you can also apply another 10 points, and that will give you 400%. So traders who like to trade intermediately, in other words, they're more swing traders that like to hold on a little bit more and want a better risk-reward ratio, we would suggest using the 300 and the 400% level. If you get out here, you're making most likely twice what you're risking. If you exit here, you're making 3 times what you're risking, okay? Finally, ultimately, we have traders who say, listen, I have done the research on the stock or the currency or the future, and I foresee a big move. I don't want to take these small exits here. I think it's going to go much further. All right. Once again, we go back to our setup bar, which is right here. Measure the range from top to bottom. We have added it each time from where these levels are, and we'd add it one more time. This would be our final exit level, the 500% level. And this is for traders who want the most bang for their buck, who really feel there's a big move in store. Okay. And you have roughly about I believe, a 4-to-1 risk reward ratio as well. So therefore, you're making 4 times what you're risking. Now, these are the range extensions. And as I said, on our platform at Pro Trader Strategies and Specialist Trading, it's automatically displayed for you. But you know how to put this together. You know how to apply that. You can do it very simply. Just measure the range of the setup bar. Now, there are a number of ways we suggest to our students to trade them. You just don't have to use each one as a fixed exit. For example, some of our traders like to sell a little bit at each level. Maybe, if they had 400 shares, they'd sell 100 shares here, 100 here, 100 here, and 100 here. Still, some other traders will say, I'm just the type of trader that gets in and out quickly. I'll get out of everything right here or out of everything right here. Still, some traders would say, you know what? I like to track the trade. So I will, let's say I got bought right here. When we get to the 200% level, I will move my stop, which is somewhere down here, up to unchanged where I got long. So if price never gets up to this level and turns around, at least I don't lose anything, I break even. Now, if price continues to go higher and hits the 300% level, well, then I will move my stop, which is at unchanged, I will move it up to the 200 level. And then just continue doing that. If it gets up and price gets up to 400, well, then I move my stop up to 300. So see, you're just tracking it. The only thing we suggest to all of our students is once we get up to this 500% level, the final level, we would really highly recommend you exit the trade entirely. Because even though we don't have statistics verifying this, we're not a statistical company. We don't believe in that. We're just an educational company. We have seen over time, face value, that price trend seems to change once it gets up to that 500% level. So we would really highly recommend, especially to traders using this in the beginning, if you're going to get out at the 500% level, to exit entirely. Do not continue to hold on, because oftentimes you'll see the trend change. All right, so let's look at the trade once again. Let's say we decided to go for the big exit right here. We said, listen, we've been researching this. We think this stock is going to take off. So let's exit at the very top, okay? All right. So as we watch the trade unfold, guess what? It got right up to that level with this multiple fixed exit strategy, and you made a quick 25 points. Now remember, we highly recommend you to get out at this 5th level, because look what happened after that. Do you see how trend changes? So there are a number of ways to apply it. You can exit, multiple different portions of your position. You can trail the different levels, or you can do the research and say, well, I want to have a fixed exit at this level to get a better risk reward ratio. It's entirely up to you, which once again goes back to our educational philosophy is we're trying to provide you with this information so that you make the decision, not us. Why? Because as I stated earlier, the only traders I know who are still trading from my days on the floor are the ones who make their own trading decisions. They don't go to trading rooms or chat rooms and find out what someone tells them to do. They don't listen to guys on TV or wait for economic report to come out. They simply have a plan in place that they've researched and that's comfortable for them, and then they implement it. Those are the traders that have stood the test of time. And so our job as a mentor is to provide you with this information so that you can make your own trading decisions. That's the goal of a good mentor. Okay, let's review exit strategy number 3, a fixed exit with multiple levels. If you're long, first thing you have to do is identify the setup bar, or another title is the signal bar. Remember, that's where all the rules come into play. That's where all the requirements are met, and you're either going to buy or you're going to sell. In this case, if you're long, you're going to buy. So what you want to do is measure the range of the setup bar. And then you'll add it to the bar's high. These are the range extension exit levels. That's all you do. Now, conversely, let's say you're short. Let's say your setup bar is a bar with a red arrow above it. So now you know you're going short. It's time to sell. Maybe you're going to buy some puts. Rather than say, well, I'll just kind of feel around and figure out where I want to get out, apply range extensions. So what you want to do is, once again, if you're short, measure the range of the setup bar and then subtract. In this case, since you're short, subtract it from the bar's low. These are the range extension exit levels, okay? As I stated earlier, these are the most popular as well as the most powerful exits we have at Specialist Trading. Our students love these, and they're also easy to apply on our platform. There you have it. These are the 3 exit strategies that will change the way you trade. I truly believe they will, because you'll be putting yourself in control. You will be in charge of your exits, not someone else, not some signal service you get that tells you where to enter, where to exit, where to place your stop. You're in charge for the very first time, okay? Now remember, you have all of these rules now to each and every one of these strategies. But please, I would really suggest, instead of, even though you can start using them tomorrow, I would highly suggest just paper trade with them for a while to figure out which one feels the most comfortable to you. Remember, you're in charge, you're making your decision, so you have to find out which one feels the best. You know, the only thing that is bad with these or any strategy is when you're out of sync with a particular method. When you feel as if you're not really comfortable, well, it's because maybe you're using a fixed exit when you should be using one that's more fluid and one that's not as conventional, okay? So please, paper trade with these, whether you want to be a dynamic exit trader or a fixed exit trader, and then decide which one makes you feel the most comfortable. Now, I know a lot of students say, Steve, this is great, but maybe I haven't been trading long enough. I don't have a strategy. I just am learning. Or maybe someone would say, you know what, Steve, I don't trust my strategy at all. It's terrible. I don't even trust it to work anymore. So even if I had these great exit strategies, my strategy to get long or short is terrible, and I don't even feel comfortable using it. Well, here's the good news for today. We have a great special offer for all of you attending today's presentation, and for that matter, the webinar and all the good courses that you're going to be hearing today. We have what we call our Secrets of a Stock Exchange Specialist video seminar, okay? This is a great package in and of itself. It's 3 hours of trading techniques plus a full strategy. Think of it, 3 hours of trading techniques similar to what I just taught you today, but entirely different. These are more high probability trading edges that you really won't find anywhere else, because these are things that I've accumulated from my days on the trading floor and from my 48 years of trading. Now, some years ago, I was asked to be the head speaker at a conference in Colorado, and I spoke for 3 hours, and they were lucky enough to record it for me, and this is a video recording of that. So you will be sent this 3 hours of trading techniques, and it's yours to keep, plus a full strategy. In it, I talk about which indicators not to use. I also go into the difference of a system versus a strategy. I tell you what the #1 chart pattern you should be looking for in any strategy or any technique you use. Talk about how to be on the right side of the markets, an extremely important chapter in this 3 hours of trading techniques. And everything I teach in this video seminar can be applied to virtually any market and any time frame. But here's what I feel is the best thing about this 3-hour course. You're going to get the complete rules to strategy #1. Now, this is one of our most consistent pullback methods, and you're going to get the complete rules on how to trade it. So if you're not familiar with what strategy #1 is, it's a pullback method. Now, this is a pullback method that's designed to buy at lower levels and to sell. By sell, I mean go short or sell short at higher ones. Okay, those are what pullbacks are. A lot of traders don't like to buy when something is going higher. They feel uncomfortable. So pullback traders like to wait for the stock to rest and pull back to lower prices to have a buying opportunity. Well, this is a perfect method. In fact, this is one of our most consistent pullback methods. Let me share with you some recent strategy examples using strategy #1 that our students took advantage of that have strategy #1. Here's an older chart of PLTR, okay? Obviously, it's going up, right? It's in an uptrend, making higher highs, higher lows. But this is why students usually fail, because they don't really understand what the market is doing. They'll see this happen and say, oh, well, that guy in that chat room says it's time to get out. It looks like we're in the beginning of a downtrend. So if you're long, get out of all your trade, take your profits, and wait for a buy signal to be generated. Well, that's not really true, because this is not really the beginning of a downtrend, something where you have to sit and wait on the sidelines. This is actually a pullback. This is not a downtrend, but strategy number one, through the rules which you'll learn, deemed that this was a pullback. So a pullback means that this is looking for a buying opportunity. And strategy number one generated 3 buy signals right here. Where everyone else thought that this was the beginning of a downtrend in PLTR, our students were buying, and in the following days were able to accumulate most likely 35 points, potentially. Here's another example, an entirely different market for all you currency pair traders. This is in the Australian dollar, all right? Obviously, the market's going lower, okay? So at this point, everyone's looking for a bottom, right? You're looking for any sign of a bottom, any sign that the trend is going to change. And then lo and behold, guess what happens? It looks like the beginning of an uptrend. Maybe that guy on TV says, you got to buy the Australian dollar. Look, you've got, you made a reversal here. You've got a bullish engulfing pattern. This is really a good sign. Probably going to make new highs. Time to buy the Australian dollar. Well, not according to strategy number one, because this really wasn't the beginning of a new uptrend. This, in all actuality, through the rules we teach you, was a pullback. Now, when price goes up in a pullback, that's not telling you to start looking, for instances where to buy. It's actually telling you this is a selling opportunity. And strategy number one, through all the rules we'll teach you, actually generated a sell right at the very high of this bar. And in the following days, the Australian dollar fell 460 pips, over $4,500 per unit, potentially you could have captured, all using strategy number one. Now, one more currency pair. This is a 4-hour chart of the Canadian dollar. Obviously, we're in an uptrend. Once again, though, looks like we're starting to go lower, right? Should we sell? Should we get out of the Australian dollar? No, this is a pullback. This is a buying opportunity. And once again, 3 buy signals were generated right here at the very low before the currency pair went up 300 pips in the next week, okay? $3,000 potentially you could have captured per unit. Lastly, let's look at IIPR here, okay? Obviously, we're in a downtrend. Some news or some announcement happened right here where it gapped lower, and it's going lower. But maybe you're saying to yourself, well, you know what? That guy in that chat room says it's oversold. In fact, it's never been this oversold before. So we're looking for a bottom, right? And lo and behold, it looks like it put him at bottom right here, and it's starting to make an uptrend. Higher highs, higher lows. So that guy on TV says it's most likely going to fill the gap, probably make new highs. So you want to jump in and buy, right? No, this is not an uptrend. Strategy number one deemed that this is a pullback, meaning it's a selling opportunity. And so every day you go through the rules until ultimately you see that 2 sell signals were generated right here. And in the following days, the stock fell 35 points. So what happened to the, bottoming out? What happened to the beginning of a new uptrend? This is the beauty of strategy number one. And as we said, you will get all of the rules and know exactly how to apply it. Trust me, a year from today, you will have wished you became a member of this course. That's how popular it is, and that's how powerful it is. There's that much information. Remember, you're getting roughly close to 5 decades of tips and techniques I've accumulated that you won't find anywhere else, because they're things that I took from my years on the floor and also things I've accumulated in my nearly 5 decades of trading. Okay, let's break it down. Remember, you're going to get many more high probability trading edges. I'm going to tell you which indicators not to use. I'll go into detail about the difference between a system versus a strategy. I'll tell you how to be on the right side of the market where you'll instantly know what the bias is of the market. You can apply all of these things to any market, any time frame. You'll get the complete rules to strategy number one, as well as educational correspondence. Now, normally my sister site, which is Pro Trader Strategies, on their website, they have this advertised strategy number one and the entire sessions, the Secrets of a Stock Exchange Specialist sessions, for close to $1,000 because it's jam-packed with that much information. But here's what we're going to do. Because you taking the time out of your day today on Thursday to see us speak, we're going to deeply discount this for a very short time down to only $37. I mean, think of that, $37. Most likely you can't even go out to lunch for $37, less than that, for sometimes even by yourself. But if you were with someone else, a friend or significant other, most likely it cost you 50, 60 bucks just to get an inexpensive lunch. But for $37, you're getting things that I've accumulated in 5 decades that you won't find anywhere else, on none of the major platforms, none of the major courses, okay? This is for a limited time only. Most likely, a week from today, this will go back to the $9.97 price level. So here's how to take advantage of this. Remember, if you're serious about taking your trading to the next level, take advantage of this and contact my sister site, which is Pro Trader Strategies. You can call them directly at area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your order over the phone for $37. Now, you see that link that's just below that. That is the link that will take you to the info page where this offer is, or you can actually sign up on there if you'd like, but it's not a live link. So you're going to have to probably copy and paste that HTTPS ProTraderStrategies.com secrets offer. I think David may be posting that on the chat box. I'm not sure, but the best thing I would suggest would be to give Pro Trader Strategies a call at 310-598-6677. Now, I believe I have about 5 or so minutes for any questions. We started a little early because the person prior to me ended early. So we have some time here for some questions. Let me open up the chat box, see if you're, I guess you could go to the question and answer box. Yes, they did.
You actually have about 15 minutes if you
Okay.
want.
If we have any questions, I'd be happy to answer them right now. Let's see. I'm looking back here. Um, Yeah, someone's asking about the price. Yeah, that's $37 for a limited time only. What are the main things? I'll just go into what people usually ask before they ask questions. Oh, someone's saying, how can you offer such a huge discount? Well, we have other methods, we have strategies, we have indicators, we have our platforms, we have many things to educate you with, but we're trying to show you in good faith that we're not like other so-called educators and that we truly want to educate you. So this is our way of saying that this is how we want to get well known with you so that you can see that this is really, really important information and that you see that we're coming in our best interest of trying to educate you as opposed to trying to sell you some $10,000 system that you're not even sure what it's based off of. So look at it as if we're doing something in good faith, trying to teach you, because that's what a good mentor does, okay? So that's how we can offer for such a huge discount. But going back to that question, this is only for a limited time. I mean, we don't have it for $37 for the next year. It's only for probably less than a week. So take advantage of it if you're at all interested. Now, a lot of people always ask me, one of the things, let me just backtrack here and I'll come back to this page. If you see on the very bottom, it says educational correspondence, okay? A lot of students don't understand what that is, and they say, what exactly is educational correspondence? Educational correspondence is probably the next best thing to having me sit right next to you, because we know that some people may not be familiar with this type. They'll say that, gosh, Steve, it's too simple. I'm not really sure I'm doing this correctly, or I've never traded this way before. I never really looked at price. I was always taught to look at earnings or taught to look at the fundamental news. Well, all of our methods are based on market behavior. So if you're not familiar with that, we want to make sure you feel comfortable. So each and every one of my students, regardless if you buy one of our more expensive packages or if you spend $37, each and every one of my students gets my personal and private email address. So you can email me anytime you like, after the close, before the opening, during market hours, even on the weekends, and I will get back to you as soon as possible. And this is the next best thing to having me sit next to you. You can ask me to check your work. You can ask me a question you don't really understand. But this is the next best thing to having me sit next to you as if I was in town right there and teaching you and looking at the same screen. Now, a lot of people are afraid to email me because they say, well, Steve, does this go to a assistant? Will it automatically go to a salesperson? Or will someone working at the company see it? No, it goes directly to me. This is my private email. So no one else, excuse me, no one else will see the email other than me. And I will get back to you as soon as possible. Okay. Someone's asking, once purchased, how long is this offer valid? Well, once purchased, it's yours. I mean, and the offer, you've taken the offer once you've purchased it for $37. So, and it'll go back to roughly $9.97, but you won't need it anymore because you've already purchased it. But the time limit, I would probably contact Pro Trader Strategies because since they're in charge of all the pricing and the discounts, they determine how long the limit is. I know sometimes we've given big discounts like this for only 24 hours. Other times they've let it last for a week. So I would just give them a call. There's no obligation. Don't worry. They're not going to force you to purchase anything like other companies do. It's just they're very flexible. They're there to work with you, and they will tell you how long this offer lasts. Okay. Uh, yes, there are trade entry strategies discussed because we're giving you the full rules to strategy number one, and you will know exactly how to enter using that strategy as well. And that has a number of variables for that entry as well. So you'll get that entry information included. So it's just a ton of information. And trust me, $37. I mean, if you can't afford $37, well, you have to have some serious consideration whether you should be trading or not, because that is probably one of the lowest prices we've ever had. And this is, once again, nearly 5 decades of information for less than going out to lunch. So really, if you're serious about trading, take advantage of this. Take advantage of this because it's not going to last forever. Okay. Good questions. Good questions. Any more? Well, you still have me. We still have about 5 or 10 minutes. Yeah, we answered the question already about the educational correspondence. Does this expire? Does the video oh no. A lot of people think that once you buy this, it's the video or the course is good for like a couple of months and then it just kind of like disintegrates or just ends on its own. No, it's yours to keep forever. So this is not something that ends and just goes off into the cyberspace. It's yours. You have the link to this recording. You can watch it whenever you like. We have a number of students who have purchased this and it's really helped them. And then they'll say, gosh, this is great, Steve. And then every once in a while, I use it as a refresher course and I'll go back and I'll watch the video. And sure, because it's yours, you can go back as often as you like. But nothing ends, after you've purchased it. It's yours for life. Okay. I hope that answers your question. Good questions. Any more? Let me see if we have some more here. No, I think that's about it, David. I think we've answered all the questions unless there's somewhere else, but I've I've answered all of them so far. So I think if you're really serious about taking advantage of this offer, just give Pro Trader Strategies a call, 310-598-6677. David has posted the link up there on the chat box to make it easy for you. And you can open up that browser and get more information. And you can start watching this as early as today. You can start looking at this in the next 10, 15 minutes. So that's how simple it is to start getting all this information. Okay. Okay. If there are no further questions, I will leave it back to you, Dave. I think that's about it. And thank you all for attending. I really hope you learned something today. And I really wish you all the best of luck trading.